This is the second part of a 2-video series about risk management. So if you haven't watched the previous video, please watch it first to help you understand the concepts I'm about to share in this video. In this video, we'll use the concepts of risk management to 3 stocks that I traded before. And I'll show you a little trick that I use to minimize my losers and maximize my winners. So stick around. What's happening, traders? If you're new here, I post weekly trading videos. So please subscribe and hit that notification bell so you don't miss out on anything. So to recap briefly what we discussed in the previous video, we risk 1 to 3% of our total account per trade. We should also put our stop reasonably lower than those obvious levels. And to determine the number of shares that we can buy, we just divide the dollar amount we risk from the distance of our entry to our stop. Okay, so we have our first example, Longview LGVW, and we will try to apply the concepts of risk management in 3 stocks that I traded before. First, we draw our support line. Possible support line here is around 19.1. You can see it got tested multiple times. Then we have our repeating level, which is possibly our resistance line at 22. First, we determine our risk amount, which is 1%, or say we have a $1,000 account, so that's $10. Next is our stop from entry. So first, we determine our entry, which is in this example around 20.6, and then again we want our stop not at 19.1. we want it to have a little bit of a wiggle room below that, so say 18.86. so that's gonna be stop from entry 20.6 minus 18.86, 1.74. so the number of shares is dollar divided by the stop from entry, and dollar risk amount is 10 divided by 1.74, so that's 5.6. so we can buy here 5 or 6 shares of the stock. In the same manner, RKT or Rocket, so we draw our lines, then risk amount $10, stop from entry is first determine our entry point, our stop, then the difference we divide the dollar amount by that, so we have here 11.8, so we can buy 11 or 12 shares. And lastly, we have BNGO. Again, draw our lines. As you can see here, it got tested multiple times and then it got rejected hard, so this becomes our support, our resistance now, and then it got reclaimed, and as you can see, it's consolidating in that area, and right at pre-market open it then jumped immediately, so we can say that this can be our support now at this point. Then we draw our line. We have here 1, 2, 3. So this consolidation area can be our resistance around 5.9. So again, risk dollar amount 10. Stop from entry. So we determine our entry. Say we entered at this very first candle. That's gonna be around 5.7. And then again, our stop, put a little bit of the wiggle room here, 4.75. As you can see, our obvious support is 5, but we have a consolidation here. And after our support level, so we can have at least another cushion if in case it consolidates around that area, so we put 4.75, so that's gonna be 5.7 minus 4.75, so it's $0.95 over stop, it's 10.6, so you can buy 10 or 11 shares. Now this is how I minimize the losses and maximize my wins. I don't immediately go full size at the very first entry. I want it to confirm to me that my trade thesis is confirmed by the price action. So I'm gonna show you how I entered these stocks. First, we have LGVW. So we have here, say, risk for this trade is $10. So I entered at 20.6. But what I like is going into a third or a quarter of my full size. So that's the case, say 1/3. I'm gonna risk here $3 instead of 10. Now, if we want to enter it here, we have a trade thesis that this will go higher than 22. Say if the price action was like this, entered at 20.6, then I want to enter again at, say, this price around here is 20.9. So going back again, we have $3 risk Stop from entry is 1.74. So the number of shares that I can buy at the initial 20.6 area is 2 shares. So that's gonna be my first partial size. Now, if the price action is like this and it looks like it's confirming my trade thesis, I will then again buy another third of my full size. And if I buy around 20.9, I should be okay to move my stop around this area, since I don't want it to go back down there if it had to confirm my trade thesis, right? So I'm gonna move my stop. So from 18.86, which we used for our first initial position, we now move it, say, 19.8. The question right now is, how many shares can I buy at 20.9 to control my risk? Now my risk is $6. From 3, I again add another 3, so it's gonna be 6. So how many shares? So again, risk amount is 6 in total. Stop from entry is, we don't know. We know 20.9 as our next initial size, but after we entered at 20.9, our average will move. So we don't know our average right now, and our average is gonna be dependent on how many shares we're going to enter at 20.9. Going deeper in this, we now have again $6 in total. New average minus 19.8. So that's gonna be our stop from entry. We don't know. So that's gonna be our new average now. And we substitute. It's getting a little bit crazier right here, but bear with me. Then we have our number of shares, $1 over stop from entry. So substituting all of this, we get a somewhat a complicated equation. So we don't like that. What I do is I made an Excel sheet to help me figure out this question. So I'm gonna show you the Excel sheet that I always use when I trade. So I put here first ticker symbol. So going back to show you how I do this, first stop is 18.86. Then we bought shares at 20.6. Our first example, 6 shares. And you can see here, it's about $10. It was 5 or 6. So you can see here, it's $10. Firstly, I don't want to enter full size. So I want to enter a third, so about $3. So you can see here, 3.5. I'm okay with that at 20.6. And this is gonna be my initial entry. Say I want to enter again at 20.9, but I move my stop higher, as I explained before, at 19.8. So at 19.8, as you can see, I only have about a $2 risk, but I'm gonna add 20.9. So how many shares can I buy at 20.9 without destroying my risk management? What we aim here is if we see a risk dollar around 6. So that's our aim, since we want to add more risk now that our trade thesis is being confirmed by the price action. So I'm gonna put, say, 6. So it's a little bit higher. So I'm gonna move it, say, 4 there. So I have 4. So I can buy 4 shares at 20.9, move my stop at 9.8, and I still control my risk about 2/3 of my full risk. Now I'm gonna explain to you how I did this. If you have questions or things that you might want to share, please leave them down in the comment section below. First, say this is cell A and this is cell B. The third column here is just A times B. You multiply these two. You do that for all the cells and you get this column right here. The total shares, you want to add all of them and put the total number of shares at this cell. Now we want to get the sum of this column. So let's call it total equity. So the average price now is just total equity divided by the total number of shares, and you can get a 20.8 average price with that, which is seen here. Now the risk dollar amount, let me move this, is just gonna be total shares multiplied by the average price minus the stop. So in this case, it's 6, and you can see it right there. So if you want a copy of this Excel file, please leave your email address at the comment section below and I'll forward them to you for free. Now, we go back to those 3 trades. The first one, LGVW, I got stopped out since my trade thesis was wrong, but I only lost about 1/3 of my full risk. So I entered at 20.6 and got stopped out at 18.86 when it didn't go as I planned. Next is RKT. As you can see here, I'm now adding. So from 22.86, right around this candle, it looked like it was holding that level. So I added after hours, 23.27. And as you can see here, after entering this, I already had my stop right around 22 and letting the price prove if I'm correct or not. Then this was, I believe, January 27 when I exited most of my positions because the overall market looked like it was going to gap down big. So I just reduced my risk, and instead of letting it go to 22, I exited this after hours at 22.55. So this trade, although I had full size on it, I only lost about 1/2 of my full risk. Now BNGO. So again, as you can see, I scale when the price action confirms my thesis. So I entered at 5.7, then I believe my stop was right around here. And then when it confirmed a strong move, I added again. The following day, I saw that the price was very bullish, and you can see that through the tape and how the prices are moving, how many volumes are there being traded at that point. And I saw that the 6th level was about to be broken with volume, so that's a very good sign of a bullish move. So I waited for it to break 6 and not get rejected. So I waited for it to consolidate or maybe just pull back, confirm that 6 now becomes the support from resistance. Then I entered at 6.2. As you can see here, this was my last add. I sold some just to pay myself, and then when I saw that the price action was still very bullish, I added on this dip at 8.2, sold some again at 9.75, most of them, and I was holding the rest for a bigger move. But this was the time when it had an offering announcement, so that was outside of the things that I considered already. So this trade is no longer valid in my point of view, so I exited at 8.1. If you find value in this video, please help me grow this channel by liking this video, subscribing if you haven't done so, share this to your friends and family, and also please leave comments in the section below as it helps this video get pushed by the algorithm to more people. And finally, before we go, you can get 4 free stocks if you use the link down in the description below, sign up to Webull, and deposit $100. With that being said, respect risk and continue to hustle, trade, and invest.